We're going to go through Adelaide's performance. We will go through some of the leading indicators as well. And we are also going to go through a bit of a case study here. A bit of an advice disclaimer before we move forward. None of this is financial advice, legal advice, or tax advice. This content is purely based on current market trends, past performance, and general principles of property investment. It doesn't constitute any specific advice. You can see here, Adelaide's actually been one of the standout performers when we're looking at the capital cities. It is second only to Perth in the capital cities and fourth overall when looking at the overall areas here between regional WA, regional South Australia, Perth, and then Adelaide with an 11% return over the last 12 months to March 2025. When we look at the stratified index of how the relevant property sectors in Adelaide have performed, you can see that the higher end of the scale has performed the least best there. The middle 50% and the bottom 25% have performed retrospectively better when we look at the last 3 months from March prior and prior to that. So what we can see there is the lower end of town is doing the best. When we compare that to the other capital cities, Darwin is by far and large the best performer out of all the capital cities there. Darwin's going through a bit of a boom. I know a lot of investors are looking at the rental yield and value for money, as well as the infrastructure boom that they've got going on there as well. Canberra not doing so well. If we have a look at Hobart, very meager growth. Perth, it's declining in some sectors, and we talked about how even some areas of Perth are in decline at the moment. And then largely amongst the other capital cities, there's some growth with the exception of Brisbane, the lower end of town doing the best. So I find that in certain areas, there's people that are really looking for value for money. If we have a look at Darwin as an example, it's really starting to pick up there. And we see that in the boom time, it's actually the opposite, that bigger end of town will do better, and then that cascades downward. When we have a look at Adelaide's housing cycle, you can see here for the last 5 years, Adelaide is yet to record a loss. When we look at the rolling annual change here, there has been some quarterly losses when we look at the monthly rate on return there, but it's only been meager. And that was in particularly when interest rates started going up from the sort of end of 2022 right into the beginning of 2023, and then things bounce back there. So when we look over the last 5-year period, Adelaide in general has yet to record an annual loss. If we have a look at the home value index, this is a nice little heat map that shows that how well certain pockets or suburbs of Adelaide have performed. Around here, around Morphett Vale, Seaford Rise, Moana, those areas have recorded big annual changes in terms of the housing value index there of more than 12% per annum. You can see up in the Adelaide Hills there's also a big amount of growth there of more than 12%. Certain pockets here just north of the CBD and then northeast of the CBD, particularly around the Salisbury, Craigmore, Gawler, Playford area, we've seen growth of around about that 12% or more in those areas as well. When we look at the annual days on market versus the vendor discount rate for Adelaide over the last 3 months to March 2025 in comparison to last year, we have a look at Adelaide. Adelaide has actually been in increase in terms of median days on market. So last year it was 3 days shorter, 33 days on market. And when we look at now March 2025, it's 36 days. So it's roughly 10% more days on market that property is selling. When we have a look at that in comparison to the average Australian, it's less than the average Australian median days on market of 40 days and less than just on the combined capitals 35 in comparison to 36. So very average in terms of the average number of days on market, or the median number of days on market rather. When we have a look at the median vendor discount, now this is the difference between the list price and the eventual sale price. We have a look at Adelaide specifically, and it is 3.5% in March 2025 in comparison to 3.1% last year, or this time last year. And what that tells us is that vendors are accepting a bigger discount, so a bigger difference between the list price and the eventual sale price. Again, a 10% decrease or increase rather in the discount. When we look at how that compares to overall Australian average, that's 3.5%, which is bang on the Adelaide discount. And then if we have a look at the combined capitals, it's just over, which is the combined capitals is 3.2% there. So slightly bigger discount in the combined capitals than we're seeing here in Adelaide. If we can compare that to some of the other capital cities, Sydney's at 3.2, a little bit lower of a discount. Melbourne 3.4, again, slightly lower discount. Perth at 3.1. We have a look at Hobart 3.4. So the discount there in Hobart is actually coming down. Darwin, again, 1% decline, 3.9% discount. And then Canberra, 2.9% discount. So in those capital cities, the discount rate has actually come down. And we've noticed the same in the actual days on market for Darwin and Canberra respectively as well. If we have a look at total number of property listings that are on the market in the Greater Adelaide area, you can see here over the last 5 years there's been a massive decline in property listings. You used to be able to see more than 15,000, almost 20,000 if we stretch it back all the way to 2011. Since 2020 we've had less than 15,000 decline into less than 10,000 to 2022 there. In addition, you can see there that there are more properties in the under 30-day bracket than there are in any other bracket there as well. So typically property don't take that long to sell in Adelaide. A lot of them are done in under 30 days, as we saw from the median days on market. And then there's fewer properties proportionately in those other brackets, 30 to 60, 60 to 90, 90 to 180, and over 180 day mark as well there as well. So not much stock on the market. If we have a look at the tail end of 2024, beginning of 2025 there, you can see there are even fewer. We're looking at around about that 7,500, whereas we used to have around about that 8,000 to 9,000. So there are much fewer properties available on the market. We always see a bit of a spike around those seasonal periods there. You can see a couple of troughs and then they pick up again in those December, January periods. People typically don't list their properties on the market over those periods. And so you can see a couple of troughs in those periods. And then you can see the listings have picked up after those troughs there as well. In terms of the residential vacancy rate for tenants, again, similar story. As we broke out of COVID towards the end of 2021, that vacancy rate nosedived. That vacancy rate is 0.5%. So the national average is around about 1.1, 1.2% nationwide. And Adelaide in general, as a greater city, you can see they have, over the last few years, an average vacancy rate of roughly 0.5%. At the moment, you're looking at about 0.6% there. So 6 in every 1,000 rental properties are vacant, according to this average, which is a very low in comparison to the national average vacancy rate. And then similarly, the number of rental listings. So there was a big trough here in the beginning of 2022. We've crept up somewhat, but we're sitting at under 2,000 rental listings. And again, the vast majority of those are less than 30 days. So typically, you can expect your rental property to be occupied in less than 30 days should you take it to market. And there's a very small proportion that are 30 to 60, 60 to 90, 90 to 180, and over 180 days there. Relatively high demand there. If we have a look at population growth, you can see population growth in Adelaide has grown from 1.35, we'll call it, in 2011, right up until 1.5 in 2021. Now, that is a growth of 10% over that 10 years there. So we'll call that 10%, 150,000 there. So that's growing in line with the lower average of Australia's population growth. So Australia's population growth at a high level, low set is 10%, medium set is 15%, and high set population growth is 20%. And we can see that played out here in the low, medium, and high set population forecasts there, with Adelaide's population set to continue to rise up to, what have we got there, 2031, we're looking at 1.8 million there. So 1.8 million at a high set, that is an increase of 20%. At a medium set there, we're looking at around about 1.7. So just over that 10 or 15% there. And then the low set is looking at around about 10% there Okay, so in terms of population growth, that's what we're expecting to see there, or that's what's forecasted. In terms of the actual areas that are due to grow, the population growth in some of these LGAs, so the Playford, Onkaparinga, where we find some of the bigger population growth areas, Port Adelaide, Mount Barker up in the Adelaide Hills, Salisbury, these areas are tipped to grow the most out of some of the LGAs that we see in Adelaide. So you can see there Playford, Onkaparinga. We've also got Port Adelaide. We've got Salisbury and Marion and Tea Tree Gully. These are some of the larger population growth areas in Adelaide's LGAs. In terms of the number of development applications here, you can see that largely they're up in and around that Playford Gawler area there, mostly comprised of houses. However, we can see townhouses and apartments within those development applications. Now, just be aware that development applications don't always constitute new builds, especially for houses. In some occasions, they might just be additions or renovations. So you'll need to double check what those DAs specifically comprise of there. So you can see here in Gawler, the number of houses that have DAs are the vast majority, 1,825, 80 townhouses and no apartments there in the previous financial year. So look, rule of thumb, if you've got a DA in for a townhouse, in 12 to 18 months, you can expect a townhouse there, long story short. So expect that supply to come to market. This is a case study for a property in Salisbury. Now, this property is listed at $599. I haven't given the address away because I don't want to put the listing to detriment. The assumed purchase price for this one is around about 650. I just done a quick comparative market analysis on this property, and stamp duty and upfront costs are around about 38,000. On that, the rental appraisal is around about 550, so 4.4% gross rental yield. Estimated council rates are around about $2,000. In Adelaide, they have an emergency service levy that you pay for. It's roughly $100, but in this case, it's $120. Water rate 600, landlord, home and contents insurance of 2,100, 8.8% assumed property management costs. I haven't added admin or anything like that in there. And then interest only loan repayments based on 80% loan to value ratio is 3680. So look, assuming all that, the net before tax annual loss on this property is around about $20,000 per annum or $387 per week. So be aware of the actual upfront cash flow that you require to purchase this property. So stamp duty and upfront costs of 38,000 plus and assume 20%, 130,000. You'll need $168,000 to purchase this property, and then you'll need to be able to borrow the remaining sum. And then you'll need to be able to fund $400 per week on average, week to week, without any maintenance or anything like that, any other assumed costs, or even taking into account any tax appreciation or negative gearing entitlements that you are allotted for this particular property as well. So look, thank you very much, everybody. I do have my contact details there on the screen if you do have any questions. I also like to take this opportunity to announce my mentorship program. If anybody would like to look at purchasing investment property and they want to learn how to do it themselves, I'd love to be able to teach you. I am offering a full day workshop program that you can attend face to face, and I will teach you the process of purchasing investment property. You are also entitled to a strategy session, of which I will tailor a strategy for you to go out and search for investment property in terms of where you should be looking, what type of property you should be looking for, what the demographic of that area is, and how you are going to source property listings. And then lastly, I will make available advisory call drop-in sessions as well for you to drop into and ask plenty of questions. If you do have any questions, please don't hesitate to reach out. I'd love to be able to answer them for you. Thank you very much for watching. And if there aren't any other questions, I will drop off for the evening. Thank you very much for watching. Have a great night.